Good morning. This is Business Morning. Welcome to the program. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, the Finance Minister Zainab Ahmed has remained optimistic that the nation's economy, though fragile, is on the path to recovery, while acknowledging that the nation saw a high inflation of 16.7% last month. Mrs. Ahmed explained that the positive 0.11% GDP growth recorded in the fourth quarter is as a result of the fiscal policies and economic sustainability plan. Let's take a listen.
In real terms, the growth between the third quarter and the fourth quarter is a positive growth of 3.73%. A movement within one quarter we have never witnessed in this country. So we're growing from one quarter to another by 3.73%. That also the movement from the second quarter to the third quarter also witnessed a growth of 2.48% is an indication that the policies that are being implemented are the right ones, and the trajectory is a positive one, and that Nigeria is well on its way of restoring a consistent and stable growth, a growth that we hope to grow to be a strong growth from the fragile growth that we now have at 0.11%.
And the Managing Director of the Nigeria Export Processing Zones Authority, Professor Adesoji Adesugba, has announced plans by the federal government to establish a medical special economic zone. And this is expected to reduce over $1 billion spent on medical tourism annually and improve healthcare delivery. Professor Adesugba, who was speaking at a meeting in Abuja, also explains that the federal government has approved the establishment of special economic zones in other parts of the country targeted at job creation. Do take a listen.
The Lekki FTZ Lagos State has been earmarked as a site for the first fully equipped and functional medical special economic zone in Africa to provide world-class in-country healthcare comparable to what Nigerians seek abroad, especially in view of a new world where we have to battle with different kinds of ailments, virus, and bacteria. The conceptualization of the zone was done in response to the emergence of the coronavirus 2019 pandemic that most countries were ill prepared for, which has taken its toll on the economic and healthcare systems of even the most developed countries. The MZEZ aims to reduce medical tourism from Nigeria, revitalize the health systems, create jobs, and conserve foreign exchange. Discussions are already underway with high-level stakeholders and potential investors to discuss the implementation arrangements for the zone, which has been met with huge positive response from all concerned.
Well, it's left to be seen how this eventually helps to sustain or revitalize our health system, because it's really appalling that we have our health system here and then a lot of people have to go abroad to take treatment. We're talking about economic recovery here, and you cannot talk about any economy without talking about the health of that economy and the individuals in that economy.
We must find ways to keep our
doctors... Health is wealth.
Exactly. We must also find ways to keep our doctors, our best hands,
absolutely,
because most of them are traveling out.
Yes, by paying their salaries, ensuring that they get the benefits that they have to get, giving them the most priority that they deserve. Exactly. It's all part of it. And the federal government says it has commenced implementation of the National Livestock Transformation Plan after securing a €400,000 grant from the Netherlands for the initiative. According to a statement from the Ministry of Agriculture and Rural Development, the pilot phase will be implemented in Nasarawa, Adamawa, Plateau, and Gombe states, with 20 other state governments expressing their interest in the project. It adds that a kick-off implementation meeting is ongoing in Nasarawa with the state's livestock transformation team in order to prepare them for the program.
And the total assets under management in Nigeria's regulated pension industry increased by 20.3% to 12.29 trillion naira last year. A report by FBN Quest says the assets were mainly in federal government securities, which accounts for 66.2% of the total amount. Analysts at the research firm mentioned that holdings of FGN paper consist mostly of bonds, which represented 55.6% of total pension asset under management. Meanwhile, the report indicates that the average value of a retirement savings account remained unchanged by the end of last year, December, at 1.02 million naira.
And talking about Nigeria's economic growth, the information and communication sector was the major driver of growth in 2020, contributing a total of 15.05% in the year, making it the fastest growing sector in the Nigerian economy and the only sector to have grown by double digits. The emergence of COVID-19 supported the growth of this sector as a lot of activities moved online. Technology, no doubt, can be said to be the lifeline of other sectors, from education to medical and financial services. And so, how prepared is Nigeria for a digital economy? We will be having this conversation with the chairman, Mobile Software Solution, Mr. Chris Uwaje, next. We'll have Mr. Chris Uwaje now join us. Good morning, Mr. Uwaje. Thank you very much for joining us on the program.
Good morning. Thank you for having me.
Good morning.
I hope it's not too late to say Happy Valentine. Thank you.
Well, we celebrate love every day, so happy Valentine's to you too. Okay, so what do you make of the fact that the ICT has become the major growth driver of the Nigerian economy?
Thank you very much. I think we saw this coming at least 50 years ago, that ICT is going to disrupt the whole gamut of life as we know it and development that is at the center. And that's why we're talking about the digital economy, as it were. And you could see that the center of gravity for the pandemic was really tech. Tech everywhere, from the combat and the hospital, from the transportation aspect, from communication. All of a sudden you saw Zoom, springing up, and all was not as if we are now glued together more than the connectivity that we know. But having said that, I think we need to sift what is digital economy and what is digital transformation. Because digital transformation is really the glue that holds every ecosystem together, including the digital economy. So that Nigeria is doing well within the digital economy framework now shows a lot of important lessons to us. One, we must really not dance to the gallery because of the positivity as well, because there are constant indicators that have helped this constructivity in the digital economy to swear. And one of them really will be the youthful resilience of Nigerians, of course, constituting more than 67% of the population. You're talking about the emotional intelligence support from Nigerians in diaspora, and that is all over the world, more than 10 million of them. They play a significant role in holding all this digital economy together. If one look at the indices of the remittances that they contribute to home. And of course, the third and very hidden factor is the extended family support, which of course Africans have known themselves. The family structure is glued together with the extended family. So you could see that this economy is revolving within this three-tier environment.
All right, Mr. Uwaje, how do you see the digital economy against the brick and mortar economy in terms of wealth creation versus employment?
Thank you. I think we have always seen the trajectory of fear within technology ecosystem. And this migrates, if you look at the steam engine era, a lot of people were scared that, this is not going to work because it's going to take a lot of job out. But guess what? it is creating jobs, new jobs, through transformation. And I think that is why the core aspect of our focus of discussion should be transformation, digital transformation. We're talking about the new work of the future of work. So what are the future of work going to be? Who is going to benefit? How is it going to happen? And we know that this cannot happen without really revisiting the educational structure of nations, which of course has become the panacea for responding to this very difficult environment. So to your key question, the job aspect, implementability, especially for Nigeria with abundant talent of youth, we need to be able to put very dynamic structures as the Minister of Digital Economy and Communication is doing now, Dr. Pantami, to build an IT park within the regions so that we can start to innovate. We are still, technology-wise, a consumer nation. And this consumerism will not take you anywhere because the transformation from other countries aided by artificial intelligence, blockchain, and of course, visual and augmented realities, IoT, these are new phenomena and they are going to challenge nations that are unprepared.
Now, Mr. Awaji, now a lot of people would believe that the expansion of the digital economy is actually capable of creating more gaps between the rich and the poor. How can we make the digital economy more inclusive than it is currently?
Okay, I think, as I said earlier, the digital economy should be really not be discussed without digital transformation. Digital economy itself will create more jobs. Digital transformation, of course, is going to challenge a lot of nations, a lot of individuals to learn anew. It's about abundant skills. How do you really transform issues within the challenges of, for example, climate change? We saw what happened in Texas, the snow, cutting off millions of people from their daily lives. You're talking about the issues of shared values in collective environment. How do we create human institutions? How do we get food security, physical security in terms of shelter, health, has been mentioned before. And of course, we're talking about the issues of corruption in governance. Is part of what the digital transformation aims to do. It needs to transform all interfaces so that you have, an arbiter at the middle of things. If you look at what happened 30 years ago in our banks, the banks were not automated and they were counting money, with the hands. And people had this anxiety, are they counting correctly or not? Because it's manual. But then an interface of the currency counter has now been able to, when they want to count your money, you can turn back because you're looking at the digital information of the figurative the aspect to make sure that, this is correct. So what we are saying is that man still remains the commander, but in the middle is technology that has really been telling you what to do because Bill Gates told us the computer is really an extension of man because our brain is so small in terms of what we think, how we think it, how we do it, how we innovate. But now with the computer, we can dump a lot of our brain thoughts and emotional intelligence into the storage. So we have an extended storage of man.
All right, Mr. Awaji.
We shouldn't be afraid of.
Yeah, Mr. Awaji, you did mention blockchain. So digital economy goes hand in hand with digital payments. What's your take on the use of cryptocurrencies?
Thank you very much. I think that has been a very hot cake around discussion, not only in Nigeria, but elsewhere. And I think there are two issues here, is how you understand the crypto part of the currency. Okay, the crypto translates, I think it's a Latin word, is a secured currency. And you need to know that really the security of the normal currency that we have, the CBN authorized to issue, is really authenticated authoritatively by the signature of the governor of central bank and also the other the signature, they guarantee that when you hold that currency, automatically you are secure and you can have a claim. The crypto itself, you find out that the founder of the cryptocurrency that turned into Bitcoin and all what's known, it has a name, a Japanese name, but the adage is that nobody can identify the originator of the cryptocurrency. So that is an ambiguity of fear that poses. So that security of crypto now becomes questionable. The second part is about the data movement. You see, we live in a digital future and data is central. If you cannot control your national data, especially within the digital economic sphere, then automatically you can fall astray in the wrong dimension. So I think it's a matter of understanding how the crypto, a lot of the youths are really into crypto, all right? But the issue is really, are we in control of the cryptocurrency in our domain? Probably what central bank is saying is not really to abolish the crypto, but that there has to be a waiting time for us to get the whole infrastructure together, for us to have the database together, for us to build the building blocks, as it were. A crypto without a blockchain is also something that you need to look at, because blockchain will be able to replicate all your data, in many millions or billion fold, so that people, even when you have the capability to change any chain, you still have a lot of billions of blocks that are relevance of the same information that has been triggered. So it's a monumental task. And who says that a nation cannot be brought down through crypto? It's still in research, all right? If you hold the sway, you hold the technology, and you have, of course, the team that has been. I mean, the crypto, the Bitcoin, you saw how it swelled up when the South African investor, went into dumping about 1 or something billion Bitcoin. Yes, all right? And thereafter, you could see after about 2 weeks, there is a run from the market. Even the stock exchange in New York, showed, those trend. But later, you also saw something, because really you could say who is in control of the cryptocurrency. That is just it. China got this right because China has gotten into digital currency for a purpose, because they needed to create the Asian hemisphere of financial trust. So,
well, I guess
so those are some of the issues.
Well, I guess, Dr. Uwaje,
it is not for us to say just cancel it. You need to be able to study. You need to be able to create a research foundation to be able to say, okay, in 50 or 100 years, where is crypto going to take nations of the world to? Then you can
I agree with you, Dr. Uwaje, and I guess IT gurus and software gurus like you can actually help the regulators, the government, to really understand this platform and see how maybe Nigeria can actually play into it. Play or not to play. Anyway, that's their decision to make, but it's important that they get to understand how it works, just as you said. Thank you very much. It's always a pleasure talking to you.
Thank you.
It's my pleasure. Thank you very much. My regards to the chairman.
You're welcome. And Commodities Market Update is next.
And oil prices rose for a fourth straight session this morning to the highest levels in more than 13 months, underpinned by monetary easing policies and a lower crude production in the United States. Brent crude futures for April gained 19 cents to $67.23 a barrel, while U.S. West Texas Intermediate crude for April was at $63.30 a barrel, up 8 cents. Both contracts touched their highest since January 2020, earlier in the session, with Brent at $67.44 and WTI at $63.67. An assurance from the U.S. Federal Reserve that interest rates will stay low for a while boosted investors' risk appetite and global financial markets. Fuel supplies and the world's largest oil consumer could also tighten as its refinery crude inputs had dropped to the lowest since September 2008. The Organization of the Petroleum Exporting Countries and their allies, including Russia, a group known as OPEC Plus, is due to meet March 4th. And now we have Damilola Akimbami, Head of Research at Financial Derivatives Company. She joins us now for the Commodities Market Update. Great to have
Good morning,
you.
Dami.
Good morning.
Good to see you.
Thank you very much.
So with oil prices now rising, currently at $67 per barrel, do you see OPEC Plus raising its output?
Well, that is one likelihood of the meeting that is going to hold next week, Thursday. And Russia is actually pushing for the cartel and its allies to relax its production further. So there are projections that they might increase production by about 500,000 barrels. Meanwhile, Saudi Arabia is pushing for them to maintain status quo. And bear in mind that up till now, Saudi has been reducing, or he has reduced its production by about 1 million barrels per day. Now, that agreement is going to lapse at the end of March. So if they decide to increase production by 500,000 and Saudi reverses its one production cut, so we're going to be looking at an increase of about 1.5 million barrels in terms of supply. So that would dampen market sentiments, and like you rightly said, oil prices are right now trading at a one-year high. So depending on the outcome, if they indeed relax the output cuts next week, we would see oil prices start to trade lower towards $60 or maybe even below that.
So while oil prices continue to go up, at least for now, Nigerian government is trying to figure out how to manage the inevitable, price hike in fuel, PMS prices. So your slide says state governments to review the PMS price. What are they expected to do here?
Yes, so the federal government has said that, or has pushed that decision. The state governments would have the final say in the determination of fuel prices, and the state governors are
Do they have that control?
Well, the federal government has said that, and they are meeting. The federal government is meeting with the state governors today at their Federal Executive Council meeting. And the Senate has come to terms with the fact that deregulation is inevitable. We've been talking about deregulation for quite a while now. And the thing is that you need to unlock the investment dollars, you need to unlock the production dollars, and what that would entail is the deregulation of the industry.
Look
at diesel. Exactly.
To be passed.
Look at diesel. The diesel market has been deregulated. Nobody's talking about the price increase in diesel. And the price of diesel has moved from 190 to 230 to about 250 now. But it's not an issue because the markets have accepted what is going on now. And in addition to deregulation, you also have to pass the oil reform, which is the PIB. The Senate is saying that that might be passed by Q1. Q1 is ending next month anyway, so let's see how that pans out. But it's very important because once you pass that bill, you're sending that message to the markets that you're serious about the downstream industry, you're serious about attracting investment, you're serious about unlocking the opportunities. What are you going to do about refineries? With Dangote's refinery coming on shore, are there going to be opportunities for other private refineries to come on board? With that, you'll be reducing your dependence on fuel imports.
What would that mean for the PMS price?
Also, for what that means for the PMS price, in the short term, definitely we might see price increases. But the thing, again, since it's going to be subjected to market forces, when oil prices increase, the market would accept and expect an increase in oil prices, which is what we're seeing, for instance, in diesel, and nobody's going to complain. And when oil prices decline, we should expect to see a decline in PMS prices. So that's what would play out.
But then another challenge there is the issue on the foreign exchange market. I mean, if the marketers, aside from NNPC, would have to import their products as well, I wonder how that is going to play out in terms of this deregulation, because I think that's another issue that needs to be resolved.
Yes, I agree with you. So one of the factors that is considered when you're looking at the price of the landing cost, in addition to all the global price of oil, is the exchange rate. And we know that the Naira has weakened significantly to about 408, 410 at the I&E window and 480 at the parallel market window. So right now, definitely, as long as the Naira continues to weaken against the dollar, it's going to play an impact on the determination of the landing cost and the pump price of oil. And that also brings me back to my earlier discussion about refineries. Once you have functioning refineries, then you don't need to import refined crude. Right now, Nigeria imports basically all of its refined crude needs. So that is why that is playing and having an impact now. So once we can start producing our own refined crude, we won't need the exchange rate issue. It becomes.
But are we certain that the refinery will probably come on stream this year, or are we looking at next year?
Oh, well, we're hopeful. Dangote would be in a better position to answer that question.
Okay, with this inevitable rising price of PMS, you know, looking at inflation rate now, that means we can't see a reduction in inflation rate.
Not anytime soon. And again, this is happening at a time where we're also entering the planting season. So that coupled with even imported costs, which are increasing because of the exchange rate impact. So inflation is definitely going to continue to increase. But then still, what is going to mitigate that pace of increase is the low consumer demand, the low purchasing power. So the pace of increase is actually going to slow. But definitely, consumer prices are going to remain elevated.
Now, you also have there on your burning economic issue, FG considering reintroduction of tolls nationwide. That's not good news, you know, for consumers like us. You know, we're barely struggling to survive, and then we're going to pay tolls.
Okay, let's take a step back. So first of all, the federal government is thinking of concessioning federal highways, and they want to start with a pilot scheme which would involve 12 federal highways. So what that means is that definitely the private sector now has a skin in the game, and once the private sector is involved, obviously it's going to involve a lot of investment. So to recoup that investment, that's where the tolls come in, because obviously any investor would want to recoup whatever investment he has put in a particular project or business. So first of all, what does that mean for the government? If you're concessioning roads and you're passing the buck to the private sector, it frees up more cash for the government to spend on other capital projects. And for the consumer, if the roads are better, if the roads are well managed, then you spend less time in traffic. There's increased productivity and output levels increase. Now, the issue of a toll, all countries have tools. Even advanced nations have tools. If you look at the US, for instance, they have tools. There's the cash lane, there's the easy pass lane. So, but the thing is, these highways are very wide. And the major issue right now when it comes to tolls is that for instance, if you look at Nigeria, most of the highways are narrow. So when everybody gets to the tolls, especially the fact that they're not properly managed, traffic builds up. And again, more importantly, are there alternative routes? In the US, if there's a toll, there's another alternative route. So you have that decision to make, whether you want to pay for the toll or take the longer route. But the roads are well maintained. So that is the issue also. Do we have alternative roads that are well...
Are we able to maintain
well maintained?
What we
and
have,
also these tolls, what are you using the proceeds for? The tolls are collected because you want to recoup your investment, yes, but they also should be used to maintain the roads. So I think that's where the trust deficit with Nigerians comes in, because Nigerians have seen, over the years, for instance, if you look at the Lekki toll and whatnot, if you look at the roads, people question, okay, fine, you're collecting tolls, but the roads are still poorly managed. So I think that's the issue right now. So definitely it would erode consumer disposable income, because the consumer is either paying indirectly through higher transport fares or directly if the person owns the car. So definitely that will eat into it. But if the roads are properly managed, if you're spending less time in traffic and you get to your office, you are more refreshed, you get to your factory, you can produce more, output levels would increase. And at the end of the day, it balances out.
How would this impact commodities markets?
Yeah, the prices.
Yes.
Now.
So again, back to the point I was making about if the roads are properly maintained and you have good, strong and safe roads. So you're spending less time in traffic. The logistics and distribution arm is also addressed. Bear in mind that most of the commodities, especially the perishable ones, because there's poor storage, so most of these commodities, before they even get to the market, they're spoiled. So the government also, in addition to investing in road infrastructure, also invest in the storage facilities. So both of them work hand in hand. And once at least there's no constraint to supply logistics and distribution chain, then definitely output won't be affected.
Yeah. Okay. You also have the Nigeria sets a poverty reduction committee to be chaired by the president. Wondering what this committee is expected to do. I mean, do we have to continue to set up committees to reduce poverty? Like, seriously?
Well, one fact is, yes, Nigeria has a high poverty rate. According to the NBS, this is it's estimated at 40%. Others would put it at maybe 50%, 60%. I think it's around that high level. And Nigeria has been termed the poverty capital of the world. Over the years, we've seen, obviously, the government come up with several initiatives to reduce poverty. The world is moving towards reducing poverty, but it seems like Nigeria is moving in the other way around. And why is this so? Because, we have a high corruption rate. Also, another issue that is affecting the Nigerian economy is unemployment. We have a high unemployment rate, and if people are unemployed, they would resort to other activities. The idle hand is the devil's workshop, as they say. So we have high corruption, high unemployment, which has led to insecurity, especially in the north, which is now spreading to the southwest. And also, there is a positive correlation between poverty and the level of education. And if you even look at Nigeria, for instance, where you have the lowest rate of education or the level of education is predominantly in the north. That's where you have the highest rate of insecurity. That's where you also have the poorest people. And as analysts say, the poverty that you have today is as a result of low investment in your education sector 10 years ago. So that is what is at play
so I wonder,
now.
this committee now, are they going to start improving on infrastructure, education infrastructure, and I mean all of this that you've talked about? Because I believe that when you talk about poverty reduction, the government needs to show some leadership here. They have to reduce their cost of governance. They have to ensure they provide the basic infrastructure for the citizens. They have to look at ways to create jobs. I mean, we've been talking about this for ages, and then they keep creating committees. Well, I don't know.
I agree with you. The government needs to invest in its people. By investing in the people, you have to invest in the health sector, you have to invest in education, you have to invest in power, you have to invest in infrastructure, because these are the projects that would have a direct impact on the people. And if you're investing in your people, definitely you see the outcome in terms of productivity, in terms of output. In all fairness, the government has done or come up with some initiatives. It's just that the impact has been less than significant.
That's the problem.
Yes, so that's
where is that problem? How can they mitigate those issues? They keep creating poverty alleviation programs, and yet we don't see the impact. Then that's a problem.
Well, it is a problem, and at least we know that the government is focused on creating an enabling environment, focusing on the small and medium-scale enterprises, because those are the ones, because most of these, the people that are poor, they're not the ones that own big businesses, and they're the ones that own these small and medium-scale enterprises. They're the ones that are facing power issues. They're the ones that are battling with exchange rate. They can't access Forex at 410 at the IE window. So they're facing a lot of constraints, and I believe that the government, at least, they are listening to us. They are hearing what analysts are saying.
I hope
so we should see some change.
I hope so. Anyway, thank you very much.
Thank you for having me.
Thank you. Yeah. Okay, let's turn to Eddie now for the markets. Well, Eddie, still in green. Do we have Zenith to thank for?
Well, we have the banking sector to thank for, actually, because all Tier 1 lenders posted gains. We saw a few declines from other banking stocks, but, I think investors are just taking advantage, or rather just positioning ahead of any dividends that are going to be announced soon because of what everyone saw with Zenith Bank. So people are hopeful that, same would happen from other Tier 1 stocks, and so they rushed for those stocks. And then the sector, that was what drove the market yesterday. But we also saw some movement on WAPCO. But I'll be talking to Tajuddin Olayinka, a stockbroker at Valmont Securities, to make sense of what happened yesterday. Good morning, Mr. Olayinka. Thank you for joining us on the program.
Yeah, good morning, everyone.
So we saw a lot of activity on the banking sector, and that drove the market. But we also saw huge gains from WAPCO. What's happening on that stock?
Well, nothing spectacular other than the stock also, had some losses, a few days back. So I think it was not a recovery, because ordinarily It's lost because market was losing, not because the stock had specific issues. So it was just some kind of recovery recovery on that stock.
Okay, so what are the opening calls in the market today? Are we still seeing those positive sentiments?
For now, it's too early to call, but the market is just a bit down, 0.11. But we can't say that that is the direction market will go today. Because of what happened yesterday and the result from the as you rightly mentioned, a lot is expected from the market, and I want to believe that those who are who are speculating their move from equity to fixed income will now begin to do a proper realignment and adjustment of their position. So I expect some appreciable movement in the equity market, going forward.
All right, Mr. Olayinka, thank you for your input on the program. Tajuddin Olayinka is a stockbroker at Valmont Securities. And I'll just quickly look at the market numbers. The All-Share Index was up 0.14%, with the month-to-date losses reducing to about 5.2%, while the year-to-date gains, losses, I beg your pardon, moderated to minus 0.1%. The All-Share Index was at 40,221.30 points, while the equity cap was higher at 21.043 trillion. Now, we saw higher turnover of volume, value, and deals traded yesterday. We saw about 469.56 million units, worth 7 billion naira. Now, Zenith Bank accounted for about 4 billion naira of what was traded, while GT Bank accounted for about 1 billion naira. So altogether, from the banking, so those two stocks, we saw them contributing 5 billion naira to the total value of what we saw yesterday, and all of that was traded in 5,470 deals. The sectoral performance was mostly positive, but mixed. Banking was up, consumer goods was down, industrial goods was up, insurance was down, while oil and gas gained. Just quickly about the oil and gas sector. Yesterday, Oando single-handedly drove that sector. It was up 10%. Now, earlier this week, something interesting happened. An engineer, Patrick Ojudua, I hope I didn't, spoil his name, but he filed a petition. He took action against the Securities and Exchange Commission. And his petition was because the SEC prevented Oando from holding annual general meetings indefinitely in 2019. So he went to court and filed a petition on that, saying that that was a breach of his rights to freedom of association in the Nigerian Constitution. On Tuesday, he won that case against the Securities and Exchange Commission. And then yesterday, we saw shares of Oando jump by 10%. So that was what happened in that case. So, Chimi, if anything happens, you and I, we can rest assured that we can
that's
go
creating
to the
confidence in the markets. Yes, that at least they can always fight against the regulator sometimes.
They can. Yeah, so very quickly, the unlisted securities market was also positive yesterday. And the fixed income market, I'll be talking to Chukwudi Nwaokeke, the chief dealer of fixed income at FSDH Merchants Bank, for more on that market. Good morning, Chukwudi. Thank you for joining us on the program.
Good morning. Thanks for having me.
So there was a primary market auction yesterday. Can you tell us what the turnout was and how that would shape trading today and tomorrow?
Well, the turnout, as expected, was quite good. The three tenors on offer were oversubscribed, basically, although we saw allotments favor the longer end. The 364 days, we had an offer of about 52 billion, and the DMO sold about 90.38 billion on that. With stop rates at 5.5%, while the 182 days closed at 3.5%, and the 91 days closed at 2%. We've seen a slight movement upwards across the three tenors from the last primary auction. So as regards trading today, we expect a jump in rates, at least towards the levels that we currently have, and that should lead the way going into next week. And we expect some demand to flow into the market as a fallout of this.
All right, Chukwudi, thank you for your input on the program. Chukwudi Nwaokeke is the chief dealer of fixed income at FSDH Merchants Bank. Well, that's it on the market today. Hopefully, we keep our eyes crossed, or rather, we keep our eyes, on the market and see what happens.
And keep our fingers crossed.
And keep our fingers crossed.
All right, thanks. We do a quick break, and when we come back, we cross over to London. All right, let's talk to Juliana for update from London. Good morning, Juliana. Well, Andrew Bailey has warned the European Union against mounting a raid on the City of London, saying the Bank of England will resist very firmly any moves by Brussels to force financial trading worth trillions of pounds to relocate following Brexit. What are you hearing?
Well, yeah, this all stems back, Jimmy, to the Brexit deal that was agreed between Westminster and Brussels on Christmas Eve. It didn't controversially include how the financial services will be dealing between the City of London and Brussels. We already know that Paris and Frankfurt are really keen to challenge London's dominance on the trading scene. And now what's happening is that Andrew Bailey, the Bank of England governor, believes that the EU are trying to force European-based banks to take their trade away from London and put it into the continental bloc. This is all about euros and trading in euros. And at the moment, what happens is that the London Stock Exchange is able to clear 150 billion euros worth of euro-based trade every day. And now Brussels want to take this away. This is all down to Reuters. Reuters were reporting it earlier this week. A couple of weeks ago, we already heard the Bank of England governor warning Britain to stay really tough when it comes to trade and the square mile and not taking away business. And yesterday, he repeated that call when he was sitting in front of MPs on the Treasury Select Committee.
And it's understood that Rishi Sunak has ruled out a raise in fuel duty after concluding that reliance on cars as a transport safety measure during the pandemic is still too great. Now, Sunak has been sending a signal about government's green agenda. What has changed that now?
Well, nothing has changed that really, apart from, of course, the COVID pandemic. And last year, according to some sources, the Treasury were mulling over whether or not they would increase fuel duty, which has stayed the same for 10 years. It hasn't increased. It stands at 58 pence per litre. And since it's been frozen, it has cost the Treasury about £50 billion. This is one of the ways the Chancellor was going to claw back some money. But, of course, a year on from the pandemic, we are still very deep into the crisis. And so there are suggestions that on Wednesday, when the Chancellor does deliver his spring budget, that this won't be raised. In fact, he did receive a letter from 26 MPs saying that fuel duty should actually be decreased so that those in the front line of caring for the community will be able to do so with their cars without having to pay a tax for it.
And one of the UK's largest car home operators has instituted a no-job policy for new staff amid ongoing concerns about vaccine take-up among care workers. What soundbite are you getting on this?
Well, it's a big story, not just here in the UK, but across the world. I think vaccine policies are going to divide nations over the years to come. And it's starting already here in the UK with care homes. Care home workers, of course, they're right in the front line looking after the most vulnerable and those who are most likely to catch or die from COVID-19. A couple of the care homes here in the UK, the two biggest, are saying that any new staff that come into their residence will have to have the COVID vaccine. And this is because there are, I wouldn't say a vast majority, but certainly a growing minority of care home workers that just don't want to take it. They feel that it's not it's part of their civil liberty to have that choice. There are a lot of employment lawyers that are saying any care home members or any person who owns a care home who asks their staff to take the vaccine could have to deal with the law. It's a massive issue that we have here in the UK. But, you know, is there going to be a vaccine passport or not? And that's what some people are suggesting there will be.
OK, Juliana, we'll get an update from you later in the day. We move over now to the cryptocurrency market. Well, Ladi, Bitcoin still hovering around the 50K. What's driving that market
around 50K? Well, you see, when the funny thing about this market is when Bitcoin was trading at $3,000, about that last year, there was really no attention. We didn't hear about Elon Musk buying $1.5 billion worth, even though we don't know if he bought. But now, Bitcoin is getting all this attention at $50,000. Let's see how it goes, because the last bull market, the same thing happened When Bitcoin got to about $20,000, then all the media buzz came on. Let's see what's happening now. The market cap, $1.526 trillion, up 0.76%. 24-hour volume, $153.43 billion, down 39.62%. Maybe they're done with the sell-offs at this point. BTC dominance at 61.68%. Price of Bitcoin as at 8 a.m. this morning, 50,315, down about 0.38%. It did go as low as $45,000 about yesterday. 24-hour volume, $57.65 billion. Let's talk to Solomon Amunde now. Hello, Solomon.
Good morning.
Good morning. So, $1 billion in liquidation. Bitcoin fell from $58,000 down to $45,000. Retail traders are losing money, but institutional investors are still buying. Square bought $170 million worth of Bitcoin. What's happening?
Yeah, actually, most of the retail investors don't really understand the whole thing that's happening with Bitcoin. They don't understand the volatility. And the liquidation, about $1 billion, that was about 2 days ago, about 48 hours. Now, people lost money. Like, the market was red. I'm sure you saw that. So it's very much red.
Oh, yes, I saw
And those
that.
trading features and derivatives, they lost so much, like so much. That's why I advise people, as I said last time, most traders don't make money. It's just better you buy and hold and don't trade features, because features requires massive experience. So while the other party is losing massively, the corporate bodies are buying the dip, which is what everyone should be doing, buying the dip actually and not trading features.
So what's your outlook for Bitcoin's price coming this weekend?
Yeah, yesterday during that massive dip, I actually had to load up my bags. I took in good positions because I was waiting for the dip actually. It was a major correction. And yeah, I actually bought a lot. I bought CRV, I bought Uniswap, I bought SushiSwap, I bought 1inch, I bought Ethereum. I didn't buy Bitcoin because Bitcoin didn't fall as much as I wanted. Most altcoins fell by 30%, while Bitcoin just did about 15%. So the wise thing to do is load up your bags on altcoins because they would give you more profits.
All right, Solomon, we'll see how it goes. Thank you for the update.
All right. Yeah, thank you very much.
All right, let's look at the top 5 gainers. Phantom, DAG blockchain, up 52% this morning, 75 cents. This was trading at 1 cent in January. Incredible rise there by Phantom. Lisk is up 31%, $3.65. Matic, 17 cents. Now Polygon, that's up 15%. Let's look at the top 5 losers. IOST down 15% at 4 cents. Dodo, $4.84, down 11%. So the altcoins not doing too badly, but let's hope Bitcoin stays in range at this time so that the alts don't suffer too much. That's the update, Jimmy.
You know, Ladi, the question in the mind of a lot of people, you know, there's so much ambiguity in this market. We really don't understand how this market is being. You listen to Mr. Chris Owaje say that. Yeah. Who is this person that created this crypto market?
Satoshi
and then
Nakamoto.
Where is he? That's the question.
No idea.
You see, that's the problem. Because if we should understand how this people can play in this market, how the blockchain thing works and all of that, perhaps we'll begin to have some kind of trust,
exactly,
you know, in the market. But it's interesting to understand the dynamics of the market, the going up, the going down, and all of the altcoins that you talk about, and of course, the chief of it, the Bitcoin.
The Bitcoin.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thanks for watching.